financial plan.
Good morning and welcome to On the Money right here on WDBO AM 580, always streaming inside your very own WDBO app. We got Adam Jones and Joe Bert, two certified financial planners with the Certified Financial Group here, taking your calls, answering your questions as the team at Certified Financial Group has done on the airwaves of WDBO for nearly 4 decades on this program. If you've got a question, write down this number, 844-580-9326. We'll keep giving it out. If you heard a question in the news, or maybe you were having a conversation with someone who calls himself a fiduciary and you want to run it by the experts here on the air, that's what we are doing today, as we have done for nearly 40 years. Joe, Adam, how are we doing this Saturday?
We're doing great, Josh. Good to be with you. Let me take this opportunity to introduce a new voice to WDBO Radio on the Money Radio program. Adam Jones. Although he may be a new voice, he's not a new face to Certified Financial Group. Adam's been affiliated with us now for how long, Adam?
Since 2013.
There you go, 13 years, and he's been really heading up our Gainesville office, and we brought him in the mothership here about a year ago, right?
Yes,
about a year ago.
Came in April.
Yes.
25.
So why don't you tell listeners something about Adam Jones?
Well, as Joe says, I'd been in the Gainesville branch office since 2013, so I'd been familiar with the firm for quite some time. But in April, I decided to move down here, and Joe was kind enough to bring me in-house. And we've really been able to combine 2 books of business from the outside Gainesville office and a retiring financial planner from in-house that some people might be familiar with, Roger Johnson. He was gracious enough to pass his book of business to me and let me start meeting with his clients that he'd brought in so many times over the years. And so I'm very thankful to him and my boss, Steve Summerlin from Gainesville, as he went into retirement as well at the end of 2025. So it's kind of been a great partnership.
So this is the next generation moving forward. That's what we do at CFG, always going forward. Tell them about your family.
So my wife and my son, we all moved down here to Apopka, and it's the whole change has been a blessing for all of us because my wife used to be a teacher, and she's been able to now homeschool our son, and they've been really enjoying that, meeting other homeschool families in the area to bond with some friendships and meet and really help progress forward with a move, because when you move for a couple hours away from your home that you over a decade, that's it's quite a change. So my 9-year-old, he's still doing really well. He's thriving in his new atmosphere, still facing some challenges, of course, but he is doing really well and very proud of him.
Well, we're happy to have you here and delighted to have you on the program this morning. So today's topic is...
The topic is IPOs. What are they and what do they mean for you? If you've got a question, call in 844-580-9326, 844-580-WDBO. IPOs, gentlemen.
First of all, what does the acronym IPO stand for?
Well, it stands for Initial Public Offering. And there's 2 reasons we kind of felt this was going to be fitting for today is, I'm making my IPO here on the radio show. I'm becoming public for the first time, and that's just more humor. But the main reason is there's been a lot of IPO news in media these days, probably over the last few months, and it really isn't going to stop. But it's led to a lot of questions from our clients and general investors and the retail public out there of what's going to happen. So the IPO is an acronym, as Joe hinted at, and it stands for Initial Public Offering. And that's mainly when a company decides to go from being privately owned to start sharing ownership with the public. And so they're issuing shares of the ownership of the company to the public through the whole IPO process. And I know some people might ask, why would somebody want to go public if they're privately owned? Joe, you want to touch on that?
Well, sure. It's number one, it's a way to raise capital. Companies need capital. You're either going to borrow it and take on debt and have that obligation, or you're going to go out in the public marketplace and see if you have some people that want to join you, give you some money, and help you run the business. And if the company does well, you get to enjoy it. Of course, the company does poorly, you suffer the consequences. So that's the American way. That's the capitalist system. It's worked for us for a number of years, and it's how every large company, every small company that's publicly traded raises capital, and how the system works. So we know the big one coming out this week is SpaceX, yes, sir.
And why that's been making headlines, it really isn't the only one that's been talked about in the headlines, but it's the one that's kind of coming the closest that everybody's been referring to. And, from what I've been reading, it's one that's really not, it doesn't follow the typical IPO process. A lot of the IPO process is when people start, and they start this about 12 to 18 months ahead of time, filing, getting lawyers involved to draft paperwork, and they're always trying to go through valuations with companies. And that's where some of the difficulty comes in, because some companies may think they're worth more than they are. And if you think you're worth, $500 billion and you want to raise $50 billion for a capital project, well, you got to give up 10% ownership in the company. But then if investment banks get involved and analysts come in and they say, we don't think you're worth $500 billion, we think you're worth less. Now you have to make a decision. Do you raise less capital and issue the same amount of ownership? Or do you raise the same amount of capital that you wanted, and then you have to give up more ownership to the public and other people involved? And that's why it becomes this multi-step process, and it's just not simple.
And the typical way it's been done up until this time is a typical roadshow, where the owners of the company do a roadshow, which they actually go on the road with the investment bankers and talk to the institutional investors. And the institutional investors are mutual funds, endowments, pension funds, hedge funds. And they go out and tell their story and see what enthusiasm is out there for their company, for their story, for their stock. And do the potential investors, once again, the institutional investors, believe that the story is true, that the numbers are true, that they're going to hit their targets, and that the valuation is correct? And then the price is really determined by that roadshow. Except in this case,
it's not. And really, well, it hasn't been, we should say.
Right.
So that's kind of been one of the things in the news that's made this one very unique. And, I guess that's typical to Elon Musk. He doesn't necessarily like to do everything the way everybody else does. And, your opinion on that is welcome to, if that's good or bad. And again, that's everybody's opinion, and that's not really the main issue with this IPO. But it is kind of it's a spot where nobody knows what's coming, because when they set a price that they think the IPO needs to be, instead of the banks, the institutional investors through the roadshow, then this brings in an extra variable into the equation. If he's setting a price, which I believe it's listed right now at $135 a share,
right,
the question comes in, what if the institutional investors were willing to pay $150 a share? Well, now they're getting it at a discount. And then they may end up saying, well, I was willing to pay more. I'm going to go buy more shares in the market because I was just set to put X number of dollars into the company. And if I'm getting a lower price than what I wanted, now I can go buy more, which can create a little bit more of a frenzy on day one.
Right.
And kind of getting just to that point, day one with IPOs tends to be very volatile. I mean, and it's not always positive. Most people think it's positive, and maybe statistically it is. I don't have those numbers in front of me, but some go up really fast on the first day. Some actually will go down.
Yep.
So with SpaceX, that's where the issue comes in, because the price wasn't set necessarily by the market and the investors that are really wanting to get involved. So the question is now kind of coming out is, if the price was set by the company of SpaceX, what if everybody doesn't agree with that valuation of $135 a share? What if some people think it should only be $120? Now you have people don't want to get involved. Now you have less demand than what was expected. And that's where this is really the other, as I said, the other variable is coming into play now of what could be happening on day one when the bell finally rings.
Right. I think what we need to caution our listeners about is FOMO.
Yes.
And FOMO stands for?
Fear of missing out.
Right. It's one of the hazards of investing is that, everybody's doing it. I want to get in on it. I want, the train's leaving the station. I want to jump on it. And this is a prime example of FOMO at work, because I can see it now that there'd be a lot of stuff in the press of what's going on here in the short term. And in fact, this morning's Wall Street Journal had an article about some of the very early employees. Got stock at $2 a share, and they're going to do very well. Have already done well because they've sold some of their stock in the secondary market. One engineer who started many years ago and has since left the company, but he's worth about $48 million, bought a little hotel in Italy, and he's retired. And you're going to see more and more stories about folks that and there's stories like that around, in history about people work for Disney World, people work for McDonald's, and because the notoriety of Elon Musk and SpaceX and rockets and satellites and all that stuff, it's going to certainly get a lot of attention. In fact, we did a white paper on it that we'd be glad to send to our listeners. We've sent to all of our clients that you're welcome to ask for. All you need to do is go to plan@financialgroup.com. That's plan@financialgroup.com, and just put Musk in the subject, and we'll know exactly what it is, and we'll be glad to send you out that white paper and give you our thinking about this particular offering. But we know it's going to get a lot of attention. There's certainly a lot of interest, and then following right behind that is Anthropic.
Anthropic is another one that's kind of listed for their IPO. And so for some people out there not familiar with those companies, Anthropic is the creator of it's a system called Claude. It's artificial intelligence, AI, and they have software that people are using for typical AI things. What does this mean? And it's researching and downloading and giving them all the information they need on a certain subject. So Anthropic has Claude, and that is another one that they filed for an IPO. Now, we don't have an exact date on that, but I think that's one they're hoping to get at the end of 2026, but there's no guarantee that one could trickle into 2027.
Right.
But Anthropic is another one out there, and there's actually another one similar to that is OpenAI, and that's actually the creator of ChatGPT.
Right.
So for some of you who may be listening out there and says, I'm actually tired of hearing all the headlines about SpaceX. Maybe you don't want to invest in it and just want it all to go away. It will be going away soon, but there's quite a possibility that these headlines are going to continue, and you're just going to get different subject or different companies that they're going to be talking about. So IPOs are typical to the investment world. They're really never going to slow down. These three really are getting more of the headlines. SpaceX mainly because of the valuation that they're trying to give themselves right now.
Right.
So this is realistically listed as the largest IPO in history by valuation, because I believe SpaceX is valued at 1.75 trillion.
Right. With a T.
With a T. Yeah.
There's the bumper music there. Josh, take it away.
Thank you much. If you want to join the show, if you're in fear of missing out on your question getting on the air, by all means, call in right now, 844-580-9326. Send in your open mic using the free WDBO app today. You're listening to On the Money, where we're planning tomorrow
today
with the Certified Financial Group.
Chosen once again as one of the top 100 financial advisory firms by CNBC out of nearly 40,000. And because they won't divulge the selection criteria, asked my colleagues what they thought.
Maybe it's because our history dates back almost 50 years.
Could be because we're independent. But we custody with national firms like Fidelity and others.
17 CFP professionals under one roof.
Or it could be because we're CFEX certified.
And a real person answers the phone.
In any case, we're proud to have been selected. So if you're looking for financial planning or investment advice for a fee, look us up online. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries and providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, where we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
So you guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank and there's Stevie and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in and you say, hey, Lou, I need to, I'm barbecuing this weekend, right? What do you like? And Lou goes to the big racks of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina, they are the bomb. And you go, veal? Oh, I like veal. Well, what do you got on skirt steak? Oh, we got some great skirt steak. Just came in yesterday from Montana. Skirt steak is one of my favorite, marinated up a little bit. It's fantastic. Lou will never say to you, Elliot, it's a little long on the meat here, big guy. Your cholesterol is getting high. Why don't you go down to the fishmonger a couple blocks and have a nice piece of salmon? Right? He'll never do that. Why? His job is to sell me meat, and I go in, actually the same way I go into the Toyota dealership, because I like Toyotas, and I trust the salesman to sell me a good product if I trust him. And the fact that he's got my interest at heart vis-a-vis my expectations for selling me that thing. By the same token, when I go to see a dietitian, I know she's
Welcome back to On the Money here on WDBO AM 580, always streaming inside your very own WDBO app. We got Adam Jones and Joe Bert, two certified financial planners with the Certified Financial Group, answering your calls today. Available to you at 844-580-9326. That's 844-580-WDBO. Back to you, gentlemen.
And when in the intro, I didn't mention, as I normally do, why we're here this morning. And for those people that might just be tuning in the first time, we're not here to talk about SpaceX and IPOs in general. We're here to really answer questions the listeners might have on their minds regarding their personal finances, decisions that you're trying to make regarding your IRA, 401k, stocks, bonds, mutual funds, long-term health care, all the things that Adam and I, my other son, Aaron, I have another son, Adam. Did you know that, Adam?
Yes,
Aaron?
I did. And consequently, I have a brother whose name is Aaron.
How about that?
Yeah.
There you go. Very biblical. Anyway, so we're here to take questions off the air, or on the air, I should say, things that might be on your mind. So throw out those numbers one more time there, Josh. All right, Josh is doing the phone. It's 1-800. What is it? I've heard this a jillion times. I can't remember it. Anyway, we'll come
I got
back
you
to
back,
it.
Joe. 844-580-9326. That's the one.
Okay. All right. So let's put a bow on this IPO talk there, Adam.
So one of the things we were still discussing is like some people have expectations or what to expect coming out of this. Now, again, Joe and I are not predictors. We don't have crystal balls, and all we're going to tell you is it's going to be volatile. Anything in the past that's had with IPOs, they've all gone up and down, typically on the first day, the first weeks. Facebook was one that came to mind for me, which now is under the name Meta, of course, if somebody is not aware of that. But Facebook IPO'd at $38 a share on May 18th back in, I think, 2011, 2012. And then it went down all the way to $17.55 in September of 2012. So it bottomed out and pretty much cut in half before it got its feet under it, and then it's up trading much higher right now, which of course is 13 years later. But those are some of the stories that we were trying to tell people that we have to kind of be aware of what they're going to do. As Joe mentioned on FOMO, well, you've got all these extra things that are coming in play here with companies. Facebook was one. Google had a fairly successful IPO, but those are some that happened in the past. And Joe, I think you got a couple other ones over there that may not have such good stories to them.
Yeah, WeWork, Uber, Peloton, all these names, they come out with a flash, and then after the enthusiasm wanes or people get their initial rush and then cash out early on. So SpaceX will be around a long time. You know what I was thinking about, though? How much of SpaceX is Elon Musk?
Well, there's a large portion in there, and that's what I think some people don't realize. So the ones that are going public are the A shares, which carry one voting share for the right to kind of help make decisions for the company. But what some may not realize is there's a B share of stock that Elon Musk mainly has the ownership on. And I say mainly because there may be some other insiders that have it. But B shares contain 10 voting rights.
Right. So it's 10 to 1.
Yeah.
He has a 10 to 1 say.
Really, if you want to get involved with it, you have to understand, I think the analogy I've heard is Elon's flying the plane, you're just along for the ride. Right. You're not going to be able to override this guy as of right now on decision making. And, that actually isn't uncommon. Google has a similar structure where they spun an A share and a C share, where the C share has no voting rights. The A share has one voting rights, but they also have a B share. I don't even think it trades publicly, but their insiders, their executives, their original founders, they also get 10 votes per share of stock that they have as well.
So not only, obviously, he continues to control the company as he has, regardless of what the shareholders want to do, but in the event that he dies.
Yeah.
Think about that.
Yeah, you have an estate issue kind of there, or just how's the company going to continue? Now, in some ways,
well, not only the continuation of the company from a transition and estate planning standpoint, but he is SpaceX.
Right.
He is SpaceX. He is Tesla.
Right.
He's the Boring Company. He's all those things.
I forgot about the Boring Company. That's right. I forgot that one's out there too. There's so many of them.
Yeah. But, what happens if something happens to him?
Right. And honestly, we've kind of seen that with Berkshire Hathaway that, they're a strong company still for themselves. But when Warren Buffett decided to step down, it's kind of been in a little bit of a lull while people are trying to see what that one's doing. So you're making a great point. What happens if something goes to Elon and it's not that he has to die? What happens if he just gets sick and he's in the hospital and he can't operate?
But Berkshire isn't priced at 100 times future earnings.
That's another issue. And that's why we say none of this is really ever perfectly comparable. Some are apples to oranges.
It's a brave new world, folks, so stay tuned. Once again, if you want that white paper about what we think about the SpaceX IPO, just go to plan@financialgroup.com, plan@financialgroup.com. In the subject line, put Musk, and we'll send that out to you on Monday morning.
You're listening to On the Money, where we're planning tomorrow.
Today.
The Certified Financial.
So you guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank and there's Stevie and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in and you say, hey, Lou, I'm barbecuing this weekend, right? What do you like? And Lou goes to you know, the big racks of stuff he has underneath the glass, and he goes, you know, the veal chops, just in from Argentina, they are the bomb. And you go, veal, oh, I like veal. Well, what do you got on skirt steak? Oh, we got some great skirt steak, just came in yesterday from Montana. Skirt steak is one of my favorite, marinated up a little bit, it's fantastic. Lou will never say to you, you know, Elliot, it's a little long on the meat here, big guy. Your cholesterol is getting high. Why don't you go down to the fishmonger a couple blocks and have a nice piece of salmon? Right? He'll never do that. Why? His job is to sell me meat, and I go in, actually the same way I go into the Toyota dealership, because I like Toyotas, and I trust the salesman to sell me a good product if I trust him. And the fact that he's got my interest at heart vis-a-vis my expectations for selling me that thing. By the same token, when I go to see a dietitian, I know she's going to look at all of my labs, she's going to take all the measurements, she's going to run all of her analysis, and she's going to absolutely give me her best thinking on what's best for me. Whether she's a vegetarian or a meat lover, likes this, likes that, if she thinks I should be doing something differently, even if it's not good for her, she's going to give me an opinion that's for my interest. So what's the difference between a fiduciary and the brokers? Well, these are dietitians, these are butchers. It's that simple. Brokers are butchers selling product. Fiduciaries are dietitians looking after your health. The problem is most people think that their butcher is a dietitian. So when one of your moms or dads or friends calls the broker and says, you know, I got 200 grand, I sold a little piece of property, or I got some inheritance, what should I do with it? They're going in thinking they're talking to a dietitian, and they're really talking to Lou the butcher.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today.
40 years ago, CFG has been chosen once again as one of the top 100 financial advisory firms by CNBC of nearly 40,000. And because they won't divulge the selection criteria, asked my colleagues what they thought.
Maybe it's because our history dates back almost 50 years.
Could be because we're independent, but we custody with national firms like Fidelity and others.
17 CFP professionals under one roof.
Or it could be because we're CFEX certified.
And a real person answers the phone.
In any case, we're proud to have been selected. So if you're looking for financial planning or investment advice for a fee, look us up online. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries and providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, where we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who
Welcome back to On the Money here on WDBO, AM 580, always streaming inside your very own WDBO app. We got two certified financial planners, Adam Jones and Joe Bert with the Certified Financial Group, here answering your calls live on the air. 844-580-9326 is the number to call, 844-580-WDBO. Let's put these two experts to work. We got Ken calling in from Orlando. Go ahead, Ken. You're live with the Certified Financial Group.
Good morning, Ken. What's up?
Good morning. I currently have about 95% of my money in the 401k pre-tax.
Okay.
And I'm thinking of changing that to contribute all my money into a Roth account, Roth 401k.
Okay.
I'm making just over $200,000 now. And so I'm wondering if that's a good move, or should I stay in the pre-tax and then do Roth conversion when my income is lower?
Excellent question.
Are you married, filing a joint return?
Yes.
Okay, and your taxable income is good. You're in the 22% tax bracket, solidly in the 22% tax bracket.
But if I want to jump in here, Ken, you said that your income was around $200,000. Is that just yours? Does your spouse work on an income? Because that can make a difference too.
That's total income in terms of wages.
Okay.
She doesn't work.
Okay.
So there's some I get some interest and capital gains, so it could go up to about 230 or so.
Okay. So there's a couple pieces there where if you're doing the pre-tax, the tax deduction might be actually helpful to you. As Joe says, you're in the 22% tax bracket, and if you're getting those interest and capital gains coming in, then keeping the pre-tax deduction may help you. But yeah, we understand that doing the Roth deduction may help too. The one thing I always remind people is we kind of get stuck in one way that we think it's an all or nothing basket, and you actually can do them both. You could put a little bit to the pre-tax and a little bit to the Roth, mix and match as you need it. But it sounds like from where you're at right now, I would say your pre-tax deduction, given the information you've given us, is probably going to be a little bit more beneficial just to keep that income level low.
Ken, think about it this way. In order for you to put $1 into a Roth account, whether it's in your 401k or a standalone Roth in the 22% tax bracket, you have to earn or gross $1.28. So take $1.28, take 22% off of that, and that leaves you with $1 to put into the Roth. If you put it on pre-tax, you put in the $1, you get a 22% tax deduction. It costs you 78 cents. Mm-hmm. So I don't like giving up a tax deduction today with a promise that I'm going to get tax-free money in the future. I've been suspect of Roths for a very long time. But if you're in a low tax bracket, 10 or 12% tax bracket, you're not taking a big risk. But certainly in a 22% tax bracket, grab that tax deduction today and hang on to it and use it to its fullest extent.
Oh, perfect. All right. Thank you very much.
You're welcome, Ken. We appreciate the call. Yeah, thanks for the call.
Yeah. Thank you. Have a great day.
You too. Thank you.
Thank you so much, Ken. Again, if you want to join the line, 844-580-9326 is the number to call to join the program. We got Mike calling in from Orlando. Another question about his 401k. Go ahead, Mike.
Hey, Mike, what's up?
Correct. I've separated from a job and left a 401k there. It's just sitting there, and I honestly don't know what to do with it. I listen to you guys every Saturday. And the gentleman that was just on before me talked about a Roth IRA. I also have one of those because I used to be self-employed, which I am now, again, self-employed. So I don't have anywhere to put this 401k. I don't really think it's a good idea to leave it there. What do you guys think?
Well, the best thing to do is to roll it into an IRA or create a retirement plan for yourself. So tell me about your company, Mark. Are you a sole independent contractor? Have any employees?
I'm an independent insurance agent.
Okay.
I took COVID jobs on the phone because of COVID.
Got it.
And was working from home for big insurance companies. I was a W-2'd
Got it.
Employee, and that shut down in February. And so I'm back on my own again, which I was before. And so I have a Roth that I made myself, but I also got a 401k because of going to that in-home W-2 job, if you will, and it's dissolved.
Right.
So
Okay.
it's not a lot of money, but it's money,
Yeah, and you don't want to leave it there. And what we see time and time again, right, Adam, is people leave their jobs and then they forget about them, and 20 years goes by and the company's not there, and then what happened to my money?
Right, and we actually had that happen recently where somebody came in and says if there's rules out there that if they don't have any contact with you and they can't find it, they have to turn it over to the state, and the state gets what's called abandoned property, and so then you have to go through the process of getting the check back from the state. And that's not a fun process at all. So, I mean, it's not, you don't necessarily lose it completely, but it's going to be even harder to find at that point. So if you roll it over to an IRA, you're going to have it more in your control. You'll know where to find it. And it might be even easiest to roll it over where your Roth IRA is if the investment choices are the best. And you've got a good place to invest it there. And also mainly too with the IRA, you're going to open yourself up to more investment choices if you go with like a national custodian such as Schwab, Fidelity, couple others out there, versus a 401k is limited to just whatever investment choices are in the plan.
So you could set up your own retirement plan, of course, Mike, and roll that 401k into your own retirement plan.
Right.
So you want to give that consideration too, but I definitely probably would not leave it there.
Okay, well, thanks, guys. I love listening to you. You're good educational Saturday morning for me.
Well, thank you, Mike. We very much appreciate it. And like I say in the intro, which I didn't say today, we are not a 1-hour infomercial. Our job here every Saturday morning is to provide some financial insight into the listeners that we've had over the many, many years, and we appreciate your call. By the way, you mentioned leaving abandoned 401ks and what happened to it. If you're in that situation, whatever happened to my 401k, go to lostandfound.dol, stands for Department of Labor, lostandfound.dol.gov, and you'll be able to track down your old 401k. So there you go. All right, Mike, appreciate the call. I see we have a text question floated in there, Josh.
Absolutely. If you want to join the conversation, we got some open lines for you, 844-580-9326, 844-580 WDBO. Ryan writes in. Ryan says, for private equity purchase or IPOs, what are the qualifications to be considered an accredited investor?
First of all, what's an accredited investor?
Well, it's somebody that actually has access to either private equity purchases and not just buying them on the secondary market. So you kind of open up the door to have more investment choices again in these private placements, which again, like we talked today, SpaceX, that was one where some people, if they're looking out into a private equity ways, people can go in and purchase it directly if it's being offered. But so for some people that want to qualify for that, there's 4 different ways to do it. There's only main 2 ones to the public, but $200,000 in net income if you're married, or if you're filing single, $300,000 if you're married filing jointly of your income for the year. You could have a net worth of $1 million, but that has to exclude your primary residence to be able to qualify. And then the other 2, which we'll mention them, but again, it might not affect most people out here, is you have to be securities licensed in the profession like Joe and I are. Sometimes that qualification will get you accredited. Or you have to be an insider or an executive of an actual company that's part of it. That would be considered an accredited investor.
So we've been talking about the IPO like it's available to mom and pop. You really need to be, of course, be an accredited investor, which has a joint income of $300,000 or have $1 million of investable assets. Now that's on the IPO level. Now once it goes public and is publicly traded, you can get in, for minimal net worth and so forth. So, and that's where it ultimately ends up. So
yeah. Yep. And then when that day comes, like we said, if that's something everybody's going to get involved in, if you're doing your own trading, just use caution. You got to kind of get a plan to go in. Don't just go in guns blazing and thinking that you're going to jump into this and be the owner for the long haul. I mean, first off, yes, view it for the long haul, but if you're thinking you're going to do it the first day, you're going to have to be ready because it's going to be a roller coaster ride.
Yep. And it's really a crapshoot at best. Yeah.
And I would say that I like to tell this story saying it's a roller coaster. So 2 weeks ago, I went up to Ohio to visit family, and we went on roller coasters at Kings Island. And it's a very enjoyable theme park, but they have this one called Orion. It's got a 300-foot drop, and you get to 90 miles an hour at the bottom of the hill.
Whoa.
We went on that first thing. We all had a great time. But as the day went on, rain started coming in. And so we went on Orion again. And when you got rain and 60 when you got it at 60-degree weather and it's pelting you in the face, that ride is not as enjoyable. So, the same thing we're talking about, I think, with SpaceX, I'm using the analogy. When it's going up, you're feeling great. This ride is so enjoyable. And then the day it starts going down, you're going to start going, this wasn't as fun as I remember.
Yeah.
So that's why we're trying to say, if this is something you do on your own, just be prepared.
Yeah, for sure. All right. I forgot we have Charles Kerr in the office taking calls off the air. So if you'd like to have a little private conversation, things that might be on your mind you want to discuss with Adam and me, or maybe with a lengthy conversation, you can reach him right now at our office at 407-869-9800. That's 407-869-9800. And coincidentally, Charles will be hosting our workshop a week from today at 10 a.m. right here in offices in Altamont Springs. He'll be talking about retirement planning and the things that change with Secure Act 2.0 and who was grandfathered and who wasn't, and how taking the wrong amount and the right amount out of your retirement accounts are going to impact your Medicare premiums. All that and more. Once again, absolutely free at our office next Saturday morning here at 10 a.m. You need to go to our website. That's financialgroup.com. That's financialgroup.com. Click on workshops and you make your reservation right there. And I hear the bumper music. Josh, so take it away.
We got one more segment coming up for you to hop on the air with Adam Jones and Joe Bert, two certified financial planners with the Certified Financial Group. 844-580-9326 is the number to call. 844-580-WDBO. You're listening to On the Money, where we're planning tomorrow
today
with the Certified Financial Group.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
So you guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank, and there's Stevie, and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in, you say, hey, Lou, I need to, I'm barbecuing this weekend, right? What do you like? And Lou goes to, the big racks of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina, they are the bomb. And you go, veal, oh, I like veal. Well, what do you got on skirt steak? Oh, we got some great skirt steak, just came in yesterday from Montana. Skirt steak is one of my favorite, marinated up a little bit, it's fantastic. Lou will never say to you, Elliot, it's a little long on the meat here, big guy. Your cholesterol is getting high. Why don't you go down to the fishmonger a couple blocks and have a nice piece of salmon? Right? He'll never do that. Why? His job is to sell me meat, and I go in, actually the same way I go into the Toyota dealership, because I like Toyotas, and I trust the salesman to sell me a good product if I trust him. And the fact that he's got my interest at heart vis-a-vis my expectations for selling me that thing. By the same token, when I go to see a dietitian, I know she's going to look at all of my labs, she's going to take all the measurements, she's going to run all of her analysis, and she's going to absolutely give me her best thinking on what's best for me. Whether she's a vegetarian or a meat lover, likes this, likes that, if she thinks I should be doing something differently, even if it's not good for her, she's going to give me an opinion that's for my interest. So what's the difference between a fiduciary and the brokers? Well, these are dietitians, these are butchers. It's that simple. Brokers are butchers selling product. Fiduciaries are dietitians looking after your health. The problem is most people think that their butcher is a dietitian. So when one of your moms or dads or friends calls the broker and says, I got 200 grand, I sold a little piece of property, or I got some inheritance, what should I do with it? They're going in thinking they're talking to a dietitian, and they're really talking to Lou the butcher.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today.
Welcome back to On the Money here on WDBO AM 580, always streaming inside your WDBO app. If you want to join the conversation, 844-580-9326 is the 5.5 minutes here on the airwaves. If you have a question that pops into your head just after 10 o'clock, but you still want the expertise of a Saturday morning certified financial planner from the Certified Financial Group, Charles Curry taking your calls off the air at 407-869-9800. Again, 407-869-9800. Let's head back to the phones and over to Winter Springs, where Lisa's calling in. Go ahead, Lisa. You're on the air.
Morning, Lisa.
Good morning, Lisa.
Hi. Good morning. I inherited a 401k, and I am 5 years into the 10-year rule.
Okay.
I am trying to figure out what to do with this money. I'm also on Social Security, my husband and I, so I'm concerned about taking out too much at one time because I don't want to affect that, but I don't know what to do with it. Some of it's just sitting there right now, and I know the taxation, I've got to pay taxes on it now, but I don't know where to invest it.
So I presume you've been taking money out every year?
Well, I didn't the first year because I didn't understand this, but now that I understand what's going on, yes, I have.
Okay.
About $35,000 a year. Well, I didn't take out that much last year, but I'm going to start taking out about $35,000 a year because I think that might be the sweet spot, but I'm not sure.
How big is the account?
Well, now it's down to right at $100,000.
It's $100,000, you say?
I inherited some property too, so I put a lot of money into revamping that, and it's rented out.
Okay.
But I'm not making any money on it because it's a lake house up in North Carolina. I'm having to spend a fortune for upkeep.
Okay.
It's fortunate.
So your question is how to take the money out, what to do with the money, or when to take it out?
well, where to how much I guess to take out without affecting Social Security, and when I take it out, what do I do with it?
Okay. What to do with it is a function of what your needs are in the future. Should it be invested? It should be set aside for perhaps the remodeling that you're doing up in North Carolina. How much liquidity you need? But that gets back to the basic question: is how does it impact your taxation? So, you say you're retired?
Yes.
And your husband's also retired?
Yes.
And you want to tell me what your income is?
Last year, with what I took out, about 90,000.
90,000. All right. So you're in the 12% tax bracket. So whatever you take out is going to be taxable to you at 12%. You can pace yourself accordingly. Taxation of Social Security, you're probably paying some of that now. If you get up, what's the threshold for 85% of your taxation? I think it's 43,000 if you're married.
43, I believe, yeah.
43,000. So best thing to do, Lisa, is to do some planning as opposed to, I can't answer this for you over the phone because there are a lot of variables involved.
Yeah.
But this is what Adam and I and 14 other certified financial planners do. We'd be glad to offer you a no obligation visit. Come on by the office and we can leave your situation. Go ahead.
I'm already a client of yours.
Oh, all right.
We work with Harry, but this account was with another guy at Raymond James, and my father had a close relationship to him, so I just left this money there.
I got you. But Harry can still advise you on your overall situation. Call him on Monday.
Okay.
You know, Harry's having a birthday right now. In fact, his birthday is tomorrow, as a matter of fact.
June 7th.
And he's having a birthday tomorrow, but I'm sure he'll be in the office probably next week. Give him a call and tell him about the money that you haven't told him about and how it factors into everything that you're doing, Lisa, and then he can do the calculation for you.
Yeah.
So it's
Well, I didn't know that he'd want to do that because I asked the guy up at Raymond James, and he was not much information forthcoming. So I will do that.
Well, that's how we're different, Lisa.
Fantastic.
No, that's how we're different. And he will work for you. I guarantee you it'll be done and you'll get the answer that you want. And then when it's done, call us back and tell you what the end result was.
Yeah.
All right. Thank you, guys.
You're
Thank
welcome.
you.
You're welcome. Have a great weekend. All right, Josh, once again, we want to let our listeners know that we're offering the white paper that we did on the SpaceX IPO. If you'd like a copy of that, just email me to plan@financialgroup.com. That's plan@financialgroup.com. And the subject line, put SpaceX or Musk or something, and I'll know what it is. And Charles Curry's taking calls off the air at 407-869-9800, 407-869-9800. And if you want to make a reservation for his upcoming workshop and everything you want to know about Secure Act 2.0 and how it may impact your Medicare and when you start taking money out of your IRA, that's Lisa's question. Maybe you come to the workshop, Lisa, next Saturday morning at 10 o'clock right here at office in Altamont Springs. So once again, more information about that, go to our website. That's financialgroup.com. financialgroup.com. And I would tell you what a thrill it was to have Adam on the program this morning. You did a great job for a rookie. In fact, you don't sound like a rookie. You can sit in that chair anytime, my friend. You did a very, very good job.
Well, I appreciate you having me on. You're a great leader and help lead the way to hopefully this happening more in the future.
Well, we appreciate you being here. And once again, that SpaceX is hitting this week. So we're here to answer any questions that you might have. A lot of stuff coming out about it. But don't suffer from FOMO.
Correct. FOMO is the biggest thing that's probably going to affect people the most. And that's why you need to have a certified financial planner that'll help give you a long-term plan, not a short-term plan.
There you go. Take it away, Josh.
Thank you so much, everybody. You just listened to On the Money, where we're planning tomorrow
today
with the Certified Financial Group.